Right, traders, welcome back to the channel. Here we have the GBPUSD or GU daily chart in front of us, and I'm going to be going over an SMC hack. So we've had some ICT hacks recently. We're going to be going over this simple SMC hack, which is actually what I call mapping out structure, right? So it's actually just out, mapping out structures, right? What are the kind of things I look for when it comes to mapping out structure? And you're going to see how I map out structure in real time. Just before we get into the video, I just want to say that we are offering for the next couple of weeks a 30% off Liquid FX all packages. So if you use the code Easter Sale, that will give you access to myself, regular and daily Q&A sessions, free case studies, simplified ICT concepts, simplified SMC concepts, and most of all, you get extra free one-to-one sessions for no extra cost. Right now, this is the most affordable ICT and SMC based educational community and platform on the planet. So if you're interested in that 30% off, use the code Easter Sale. So now we have the GBP USD daily time frame in front of us, right? And we're going to be going over the concept of structure. So with structure, what we mean is that we have two types of structure in the market, right? There's only two types of structure that really exist, right? You can have bullish structure or you can have bearish structure. It's really that simple and straightforward, right? So you can have bullish structure, right, where you see consecutive highs and new lows and consecutive highs and new lows and consecutive highs and new lows, right? Or you could see the opposite. You can see new lows and higher lows and new lows and higher lows and new lows and higher lows and new lows. So from here, you want to ask yourself, what actually constitutes to a high probability chart when it comes to mapping out structure, right? So some of the key points that I would recommend is the following. We have the GBP chart here in front of us, right? So you want to ask yourself what will constitute a high probability structure. Here's how you do it, right? The first thing you want to look for is you want to look for sharp moves in the market. This is the main thing we're going to be focusing on. You want to be looking for sharp moves up and down, right? Sharp moves up and down. So what do we mean by that? Here we have a structural high, right? We have a structural low here in this region, right? So this particular region will give us the structural low over here. Using the dots over here, so we have a black dot over here, we're going to change that to black. This here is the structural low, right? Let's just start over here, right? Ignore this over here. This is our structural low in the market, right? This is our structural low. Now from here, we understand that we see a sharp move down, making this low. Now we see a sharp move up, followed by a sharp move down. So if I bring this schematic over to the side, what we see is a sharp move down, sharp move up, sharp move down, sharp move up, sharp move down. So the swing points or the structural points are going to be using the same criteria where we have a swing high up here and we have a swing low down here. Now, the second point to bring your attention is that when we have a correction or a pullback or a retracement, whatever you want to call it, we need to have a minimum of 2 candles, right? So minimum 2 candles, right? So the actual pullback itself has to be greater than 2 candles, right? It should ideally be maybe 4, 5, 6 candles, but the minimum, the absolute minimum should be 2 candles, right? So this is what validates this particular pullback over here, right? Now understand we have a pullback of 1, 2 candles, right? So this just about falls into the criteria of being a sharp move up, and we have, more importantly, price giving us 2 candles, right? So we see a sharp move up and 2 candles, right? So from here now, this swing high produced a swing low down here. This is a swing low. Notice how the moves are sharp, right? Sharp move up, sharp move down, sharp move up, sharp move down, just like this, okay? Now from here we have a swing high up here, right? So we see a sharp move up, just like that. So notice how this structure has been mapped out using two very, very simple rules. It's the concept of we need sharp moves in the market. That's the first thing. And the second thing is we're looking for a minimum of 2 candles for a pullback or a retracement, right? Now, the third thing I need to bring to your attention, and this comes with market experience and market IQ more than anything, is you want to have price giving some sort of a deep correction, right? So what do I mean, right? What we mean by this is we mean that price has, for example, given us a swing high up here. This is one of the ICT concepts, premium and discount raise. You see a swing high up here and a swing low down here. So if I bring this to your attention, right, what we see here is we notice how this particular high is in discount. Now you have to understand, not every single high will come up to it. Sorry, this is a premium. Not every single high will come up to a premium. So in this case, we understand it's a premium. We understand we've had two candles and we've seen price give a sharp move down and then a sharp move up, right? So you need to understand that the correction or the pullback or the retracement, whatever you want to call it, has to be a significant number of pips per the time frame. You notice how I'm using the word significant, and I'm not giving an exact number because it does depend, one, on the time frame, but two, it really does come down to your experience and how you look at the market, right? It's how you look at structure yourself. Very important to understand. But if you use these basic rules on every single time frame, I don't think you can go wrong. And then we just follow on with our formula. Right? So what we have over here is we have price giving a swing high, swing low, right? And we notice how we have a pullback of 1, 2, 3 candles over here. So we have a sharp move up, and this sharp move up produces a new sharp move down, which comes all the way down to here, which was the 2022 low, the current lowest point of the market. Now from here, we understand our bearish structure was marked up using those three rules. Where so what we understand is that we have price giving sharp moves up, sharp moves down, sharp moves down, sharp moves up, down, up, down. Notice how the moves are sharp, and they all have a minimum of 2 candles for a pullback. Now from here, if we go to bullish structure, we're going to be, it's no surprise that we're looking at exactly the same thing. So now from here in this region, we've had a shift in our structure. And so from here, we understand we had a swing high that printed itself over here, right? This is our sharp move up. Now from here, price produces a sharp move down, right? This is something that I want to bring to people's attention, is that from here you want to pick the lowest point before the break of structure, right? So you're looking for the break of structure in this region over here, right? This high gets broken over here. So you want to ask yourself, is the swing high going to be here, or is the swing high going to be here? Now, from here, it's important to understand that this is incorrect. So I'm going to get rid of this. And the reason why I'm going to get rid of it is because we have a swing high over here, right? And notice how this is the lowest point before this high gets broken. So this is the lowest point, right? Not this, it's this. And then we see a break of structure just over here, right? And then we follow the same rules as normal, where we have a new printed high in the market. So this now is a swing high. This then becomes our correction over here, our medium-term correction. Notice how it's more than 2 candles, sticking to our 2 rules of a sharp move up, sharp move down, and it's a minimum of 2 candles. And this high produces a low down here, and this low again produces the new high, which is all the way up here. And now from here, the cycle repeats again, where we have a structural break to the downside. So this low over here gets violated. And now from here, we have a swing high and a swing low, right? So we have a swing high up here from previous, and we have a swing low, which is all the way down here. So from here, we understand our dealing range, right? Coming to the next concept, we have our dealing range from this swing high down to this swing low. So again, from an ICT perspective, right, notice how we've simply marked out our structure using really SMC rules, right? Keep the overall structure giving us sharp moves up and sharp moves down, and making sure it's a minimum of 2 candles. So these are my 2 very simple SMC hacks that can get you consistent and profitable when it comes to just simply marking out structure. And that's how it looks like from a distance, right? Very, very important to understand that we're looking for essentially sharp moves in the market. We're looking for sharp moves in the market, and we're looking for a minimum of 2 candles, right? Very important, 2 candles minimum. With these 2 rules, if I can spell today, minimum. With these 2 rules, nothing can go wrong.